Scott, assuming that the Fed is going to cut at some point this year, we've talked about the earnings trajectory, we've talked about AI, we have talked a little less about the election here, although you alluded to it. And I'm just curious how you're sort of factoring that in, particularly when you talk about that economic backdrop that you just mentioned.
Yeah, so a complicated discussion, Julie. We could spend a lot of time talking about this, but what I would simply say on this is that we've been concerned that either candidate, either party is going to face an issue going to 2025, and that's the burgeoning deficit situation, and whether we begin to lose some of the fiscal stimulus element of the past several years going forward, and does that at some level weigh on our earnings growth conviction. So I think what we're looking at here is both candidates, both parties in our view are mostly equity negative right now. The Trump narrative with talk on tariffs conjures up supply chain dislocations and has us concerned that what comes with a push down across the board tariffs is some muddling on the margin story for many companies. On the other hand, the Democratic side, you're looking to push tax rates, particularly on corporates, if you can, and that's going to be a function of whether you have both houses or not. In both approaches, we're looking at potential pressure points on equity fundamentals. So we have to weigh that into the equation. That's our starting point for how we're evaluating both candidate party policy platforms going forward.
Well, we'll talk again about this, I am quite sure, Scott. Great to see you. Thanks for joining us.
Take care.